Thank you for watching this episode of Let's Talk South County. My name is Raquel Crowell, and today my special guest is Jayson Stebbins from Guild Mortgage with the Stebbins Mortgage team. Today, I plan to ask him to shed a little bit of insight as to mortgage options of today in today's climate. Please hang on while I patch him through. Thank you so much for coming and being on my new video blog.
It's exciting.
Yeah, I'm excited. So if you could just really quickly explain to people what it is that you do, and then I'll kind of go into some questions that I had for you.
Yeah, sure. My name is Jayson Stebbins. I run a mortgage banking office here in Morgan Hill, California. We do home loans. We do purchase and refinance residential mortgage transactions. So anybody who's got a home with 1 to 4 units and looks to buy either their primary residence or an investment property, that's what we do.
Okay. So some big questions I have right now is I've been following you on your Facebook group, and you're doing a great job of keeping your community informed about mortgages and what to do and whatnot. And so I just wanted you to share with my viewers, if someone comes to you and says, I can't pay my mortgage, what are my options right now? What's the big question and answer that you have for them?
Well, we get that question a lot right now. A lot of phone calls the last 10 days have been around the impact of either work stoppages or income reductions or furloughs. So the number one message is you call the person you make your payments to first. You've got to call your servicer because every loan is a little bit different and every loan is securitized by a little bit different instrument. So if you have a big jumbo loan over $750,000 versus somebody who's got their first time home buyer loan, they're still in with FHA or somewhere in the middle, you have to call your servicer to find out how are they handling this forbearance or deferment environment. And those words are very different and they will impact the families very differently. So number one is do not just not make your payment. That's absolutely the worst thing you could do is just not make it without talking to somebody. Get on hold, get in the queues, send the emails, and then find out how your servicer is going to handle these requests for forbearance.
Okay, so for people who don't know what forbearance is, can you elaborate on that just a little bit?
Yeah, so that is what the government has said they will allow across the scope of most mortgage loans, is a forbearance of the payment. Forbearance is not forgiveness. It is basically a delay in your payment. So a simple example would be I'm impacted by COVID-19 and my income is cut or my job is on furlough. And I call my servicer for a forbearance for 90 days. So I have 3 months where I don't have to make my payment. But in the end of that 90-day period, I now have to make not only the payment that's due in that month, but the 3 months I skipped. So forbearance is fine if you're looking to maximize cash flow in a short period of time, but you have the money to catch up later. Most families, if they're asking for forbearance, aren't going to be in a position to make 4 mortgage payments at once down the road, or 6, depending on how long their forbearance is. So forbearance is truly just a delay in making the payment, and there's going to be an event down the road. Now, what happens if I get a forbearance and I get to the end of it and I can't make those payments? Well, that's where note modifications, spreading the payments out over 12 months or 24 months may come into play. But that's also where some of these servicers may charge late fees or report delinquent reports. They can't during a forbearance period, and then I can't refinance once I'm out on the other side and not caught up. So it just creates a lot of stumbling blocks with a true forbearance.
Okay, so it may free up some cash in the very short term, but long term, there could be some serious effects because, and I don't want to go back to, 10 years ago, I think, 12 maybe now, when I was a realtor and the market was crashing because, everything, it was just snowballing. And so do you see that happening where people are, they ask for the forbearance, their time comes up, then they have to pay, and then they can't pay, they can't get into a loan mod because they're behind technically. I mean, I don't want to say we can foresee that, but what's a different option so that they don't get hit at the very end and say, well, now I can't, my mortgage was 3,000, now I owe 9
Right.
plus the additional 3, now it's 12,000. I can't do a loan modification. What are some other things somebody could do for their mortgage at the time?
Well, a note modification in its purest form is not a bad solution for a family that's struggling, because basically what you're saying to your servicer is, I need to modify the terms of my note to more accurately represent my income and my situation as a family. Otherwise, we're going to go delinquent and we're not going to be able, and then there's all kinds of other ramifications down the road of short sale, foreclosure, or whatever, comes, late payments, that sort of thing. So a note modification in its purest form isn't a big deal. That's more of a deferment,
Okay.
where the investor says, hey, you're going to skip 90 days of payments and I'm going to tack it on the back end of your mortgage. That's modifying the note. The problem is most investors or mortgage banking companies have these loans and securities, and you can't just modify a note that you're trading on the secondary market without without penalty. So for those families, the number one option is try to make the payment if you can. That's number one. If you can scrape it together, try and stay current. Then if you can't, call your servicer and find out what options they allow. Some may allow for deferments, which isn't a bad option.
Okay.
If they're doing forbearance, you have to really look forward to say, how will that impact me if we have to come up with all that money? Nobody's doing forgiveness. So the problem is, depending if you get your news on Facebook or social media, you think everybody's going to give you free money. It's not. Yeah. So really, you have to figure out what the long-term plan is. It may be that it's better to talk note modification out the gate. Okay. And have some of that stuff redone early. But one of the things I recommend, Raquel, to a lot of families is, look, talk to somebody else too. Like find somebody in your life, whether it's the lender who helped you get the loan in the first place or somebody who is local and can help you with no cost, kind of lay out the reality of your situation and give you some direction to say, here's where I would point you to go and how to have the conversation in the first place.
So start early. If you see yourself going down that path, start early and try and make a plan for yourself, for sure.
Yeah, and get some advice. It doesn't hurt. It's free. Before you get on the phone and find yourself in conversation with your servicer and you're not sure what the outcome is going to be, have somebody look at the documents they're asking you to sign. Just get some advice, and that'll help you define which way is best for your family.
Okay. If somebody wanted to get in touch with you specifically, or Guild Mortgage, where would they go? What's the best way for somebody to reach someone to talk about their potential loan, modification or?
Yeah. So getinfo@guildmortgage.net is a great email address for us. It comes to me and my team specifically, and then I can, if I have time, then I'll call them and schedule some time on the phone. If not, I'll find a loan officer who has time to help review their documents. But getinfo@guildmortgage.net. You can also search Jayson Stebbins on Facebook. I keep most of my Facebook stuff public because so much of it is information distribution. So you can DM me on Facebook if you find me on the Facebook. I have a Stebbins Mortgage Team Facebook page and a Guild Mortgage Facebook page. All that's available for anyone who wants to reach out.
What are the potential rates that people are looking at if they're looking to, change their mortgage, whether they refi, pull some money out so that they have some cash on hand, or just to try and lower a rate so that they can afford their payment? What's the current market right now? That's
a great question, and it does lead us into the other side of the right now with mortgage banking and loans, and that is there is a lot of really good stuff happening too. We see a lot of similarities between 2008 and now in the fact that the liquidity of the mortgage market has kind of shrunk down. So there's not as many loan options, but we don't have nearly the same kind of infrastructure fails that we had 12 years ago. So the mortgage market is still strong. Mortgage companies are still doing well. And the primary reason for that is interest rates are low right now. Okay. Again, because the government is artificially infusing cash, and that helps drive interest rates down. But yeah, so anyone who's got any sort of conventional loan, meaning that it's insured by Fannie Mae or Freddie Mac, or a government loan with FHA or VA, any of those loans right now are really worth looking at. And I think you made the point really well, which is, why would I refinance now? Well, if I'm carrying kind of an excessive amount of debt and I'm looking at this pandemic situation and saying, okay, am I really set up for something if it was significantly worse? Do I have liquid assets? Do I have too much debt? So sometimes the ability to use the equity in your home to consolidate debt, pay things off, and just get a little cash in reserve. We're doing a lot of refinances right now where we're lowering the payment, and they get to skip a payment because of the natural structure of refinancing. So really it's creating almost a built-in 1 month relief, right?
Yeah.
They're lowering their payment, they're improving their cash flow long-term, and they're skipping a payment. So it creates a little bit of relief for them in the middle of this kind of uncertainty. By law, I can't just throw out interest rate quotes, but I'll tell you this, based on structurally what we're seeing, if anybody has an interest rate over 4.1,
Okay.
they should probably be calling a mortgage company, because depending on your credit score, your loan to value, the loan size, all of that drives the actual rate quote. But anybody who has something over 4.125, it's probably worth calling and just running the numbers to see if there's opportunity.
Okay, yeah. And, the other thing I would just want you to quickly go into, so you had said, at Fannie Mae, Freddie Mac, unconventional, conventional. Can you go into just a brief description if people don't understand if they have that type of a loan,
Yeah,
the numbers on that?
sure. In our counties around here, Santa Cruz, San Benito, Santa Clara, Monterey, we have the conforming loan limit across the country is 510. So anybody who has 510 or below, you're in a Fannie Mae, Freddie Mac, FHA, or VA insured conventional loan. In our market, because our home prices are so expensive, they have this next step up, which is still insured by the same organizations, that goes to 764. So really 764 and below is insured by Fannie Mae, Freddie Mac, FHA, or VA, and those are conventional loans. Anything above that is what we call jumbo. Jumbo lending is the one that's been the most impacted by this market volatility. The liquidity of jumbo lending is almost gone. So most jumbo loans now are almost exclusively with banks. So anybody kind of in our marketplace that's under 764 or so is considered a conventional loan and eligible for any of those, financing types.
Which is somewhat hard to come by in this area.
Yeah.
I mean, you either bought a long time ago or, you have a smaller home.
Yeah.
But
And
they're out there for sure. But yeah.
But that's one of the other things too that people hopefully will see, is that there's a lot of difference between this environment that we're in now, these events, and what happened 12 years ago, primarily because in this market nowadays, people have the underwriting criteria for the last 12 years has been significantly more difficult. Everybody who got a loan has a job and has equity. It's just a totally different world. This is the analogy I tell my clients, the difference between 2008 and now 2020. This event that we're in right now, it's like we're cruising down the freeway at 75 miles an hour and traffic comes to a screeching halt, and it's because there's a 25-car pileup ahead of us. At some point it will clear and traffic will start moving slowly, and then again back to normal. Yeah. In 2008, we were moving along at 75 miles an hour and the entire freeway system collapsed. That's the difference. This is ultimately, we're going to work through these liquidity issues, and the market and the food chain of mortgage lending and financing is much healthier than it was back then, when these toxic mortgages had kind of infested the food chain and created all these problems. So it's just different.
Yeah. How is this affecting people who are trying to buy right now? I mean, are the loans still readily available for them? Are the guidelines a little bit harder, being that, right, you have to supply employment and whatnot? I mean, how is that going to affect people trying to buy their home?
So the answer to your question is are people still able to get loans? Yes.
Okay.
Are guidelines changing, and is it a little bit more difficult? Yes.
Okay.
The reality, though, is most of the impact right now is kind of mental and emotional, which is this the right time for me to even bother with buying a house? or should I take my house off the market and not sell it right now? That's really the bigger impact. We've been in a very low inventory space in our Bay Area counties for a long time. There
Yeah.
hasn't been that many homes on the market compared to previous years. That's now exacerbated by the fact that people are pulling their homes off the market during this time because they either don't want people in their home or they feel like they're not going to get their price. I can tell you that the buyers who are sticking with it
Mhm.
right now are finding not very much competition. And the people who are listing their homes right now have to do it for a reason that doesn't matter what's going on in the world, they have to sell their house. So there's an opportunity, I think, for buyers to really stay in the game. Interest rates are low, inventory is a little bit low, but your buyer count is low. So, you know, if you are in the buy space, stay really connected with your realtor because there may be opportunity. And if you're in the sell space, you know, as long as you can accommodate kind of the new virtual open house and the virtual showings environment that's going on, if your house is, you know, you still have the ability to control the price point if you're not happy with the offers. But there's a lot of people out there who want to buy a house, and this may be a great time.
Yeah, I plan to talk with a few realtors as well because being a realtor myself 12 years ago, not being able to show a home in person is hard.
Yeah,
People, you can look at photos that have, now photography has become so manipulated and such that the room looks bigger on the photo that people just want to see. And sometimes you just drive up to a place and you get a feel. So I would imagine that the
right,
real
right.
estate market is taking a turn
Yeah,
too.
I mean, I definitely understand the concern that families are having about, you know, is this the time to buy? Is this time to sell? If generally speaking, the market stays constricted through this shelter in place time, once it's lifted, you're going to see some sprinting to certain properties because there will either be more come on the market all of a sudden and the dam will break a little bit from the buyer side, or you'll have sellers all of a sudden starting to recognize that they need to improve their price point in order to keep people engaged. So we'll see. I don't have a crystal ball. I've been doing this for 27 years. I never, you know, I thought I had seen it all. I haven't now. So you
Yeah,
never know. You never know.
I know this is a different world. And, I've talked with a few other mortgage loan officers and they're like, we're actually busy. People
Mhm.
are calling away and saying, what can I do? Whether it's, some sort of deferment, refinance, there's so many different options. So
Yep.
that they just need to find out. Well, thank you so much for
Yeah.
just having a little chat with me. I follow you on your Facebook page and you popped up and I thought, this is great. I'd love to get more people out there to know about what you're doing. So I appreciate
Yeah.
you taking
And
some.
like I said, I do Facebook Friday every week, and that's usually open for public consumption. So feel free to follow me on Facebook, or you can just go to my page and check it out whenever you have a few minutes.
Okay. Well, thank you so much.
Thank you. It's great to see you.
You too. Bye.
All right. See ya.
Thank you for tuning in. That was Jayson Stebbins with the Stebbins Mortgage team at Guild Mortgage. If you have any questions, I will put his informational email down below where you can send him an email. You can also follow him on Facebook where he does Friday Lives with just a few tips every single week about mortgages, refinancing, and the state of the market. My name is Raquel Crowell, and I thank you for watching this episode of Let's Talk South County.